What's going on, everybody? It's Costa G. Welcome back to the MSU WMA podcast. My guest today is Mark Cecchini. Mark is currently the Director of Wealth Planning at Catalyst Wealth Advisors and works remotely in Bozeman, Montana. He is a graduate of Virginia Tech's Certified Financial Planning Program and has held positions in the wealth management industry all over the country. I had a great conversation with Mark about all of his career experiences, so stay tuned. So hi, Mark. Thanks for being here. We're excited to have you on the podcast today. So to start, we like to ask all of our guests to just kind of walk us through their background, basically from undergrad. And I know you went to Virginia Tech and there was a CFP program there when you were there. And then if you could just go from basically then all the way into where you are now.
Yeah, absolutely. First of all, thanks for having me. Glad to be here and happy to share my experience. My career path has kind of been an interesting one. So some of the moves were career motivated. Some of them were personal life motivated, but yeah, I'll just kind of dig right into it. So yeah, I went to Virginia Tech for undergrad and was a business undecided major for the first year and a half at Virginia Tech, just kind of, working through my general education classes, taking accounting, taking business applications, all that good stuff, and stumbled across an information session for our CFP program and was hooked from the very beginning. I really enjoyed kind of what the advisor had to say about, hey, this is what financial planning is. Here's why it can be a rewarding career, and here's what we specifically at Virginia Tech have to offer you in terms of why students would want to enroll in this, as opposed to just doing accounting or CFA track or corporate finance track, or a lot of really good options that we placed students in, just as a big state school with a big business school. So I decided to jump into it, and really was confirmed by when I went home to my hometown that summer and talked to a gentleman who was an independent practitioner at the time. He's now under the Morgan Stanley umbrella, but he was at the time kind of operating his own firm. And he just told me how rewarding it was, all the different aspects of personal, analytical, investment markets, all the things we know and love about what wealth management is and what financial planning is. So he was just kind of confirming that if I wanted to go that route, that it would be pretty fruitful. And if you bide your time and do what you're supposed to do and just be a really solid professional. So went through the whole Virginia Tech program and really enjoyed all my classes there. I got recruited from a firm in DC, outside of DC, called Sullivan, Barrett, Sparrows and Blaney. It's quite a mouthful, but they shorten it to SBSB just so people can understand kind of what have a little brand recognition. So SBSB, massive regional RIA, very traditional fee only investments, financial planning, and tax. So they actually did in-house tax. Started there as an associate financial planner. They manage about $4 billion of private investments for high net worth clients in the DC metro region. And they're unique in that they kind of had an ensemble model. So they had 4 or 5 really talented managing director partners who probably could have had their own firm in their own right, but they all came together in 1995. So it's been around a long time. And they just combined forces, and now they're this massive $4 billion firm. They were owned by the Bank of Montreal, Harris, at one point. And so when I came into the firm, it was actually, they were operating as a RIA, but underneath a bank, which was a very interesting structure and not one that I was necessarily used to. The bank left us alone. And so that was a nice kind of, having independence as an RIA, but having the backing and the resources of a big Canadian bank. Right. They actually ended up purchasing themselves back from the bank. And now they're wholly owned, employee owned firm again, and they have about 65 employees. So I spent 5 years there, starting from associate financial planner, and they had a very well-defined career track. So I went from associate financial planner to senior associate to manager to senior manager. And so eventually when I left there, I was a senior manager / client advisor, and was working on about 100 relationships, 50 of which I was kind of the lead advisor on. The other 50 of which I was kind of playing that second support advisory role. Mm-hmm. cut my teeth in income tax there too. That was a very interesting, not something that coming out of college, it was something I was passionate about, but we did taxes in-house. And so we had CPAs that were actually preparing returns for clients as part of the planning offering. And so as associates, we were pulled into income tax prep once a year around, March, April, tax time, and going through October with the extension deadline. And we were, doing data gathering, source documents, all their W-2s, K-1s, 1099s, inputting them directly into the software. And so as much as it was painstaking work, for someone who thought they were just going to be doing planning and client service and the flashy part of what we do,
Yeah.
we were really pulled into that, and I'm very grateful for it, because now I teach a class in income tax through UCLA. It's really a vital part of the planning process, is understanding the taxation part of any recommendation. So that was kind of a blessing in disguise, doing that for a couple of years. So to cut to the chase, I then moved to Los Angeles, wanted to kind of experience a different part of the country, a different part of our industry. And so I joined a family office firm called Aspirient. And Aspirient was the product of two massive RIAs, one of which was in LA called Quintile Wealth Management. They were more of a family office, true family office, and a firm called Coaches Fitz up in San Francisco, which is very well known. They combined forces to create a $12 billion RIA I think it was back in the early 2000s. And so that was really a powerhouse. And they have 200 employees across 12 locations across the country. Still independent, still fee only, and they're not owned by anyone. And so I jumped to LA and worked for their family office group, which exposed me to ultra high net worth strategies, from income tax to estate planning to philanthropic foundation planning. We even had a bill pay group that would actually manage clients' bills for them, pay their household employees. I mean, so we were really dealing with an upper echelon of client for good and the bad and the ugly. But it was a great learning experience. Again, I spent a little under 2 years there, and was working with, very, high-end clients, CEOs, athletes, entrepreneurs, people who had very complicated personal financial statements. And, they're also serving in kind of a corporate capacity for their companies as well. So there's a lot of moving pieces with stock compensation and RSUs and all the things that, a C-suite executive person does. And then I moved on from there. I moved to Montana, where I needed to work remotely for a now ex-girlfriend of mine. So that was a personal choice to leave Aspirient, and worked for a company called Facet Wealth, who is serving to more of the mass affluent category. So they're working with folks who just want to pay a flat subscription fee for planning. It's all remote, and there's no fee for investment management. So that was a unique experience. And finally leads us up to my role now. So it's been a long-winded explanation for your first question, Costa. But my current role now is I'm the director of wealth planning for an RIA in Newport Beach, California, called Catalyst Wealth Advisors. We manage about $60 million right now, and it's just my boss and I. And we just hired a third employee who's going to help us out with some operations and client service. And so that's kind of where I'm at now.
Yeah. Yeah, I think definitely a long story, but I think a rich one as well. So
Right.
something I wanted to touch on, and you've already kind of touched on it, mentioning that you moved from, the East Coast, the DC area, all the way over to the West Coast in LA. What was that experience like, and how did you kind of set down roots or begin to build a network on the other side of the country?
Yeah, it's a great question. That is by far the toughest part of leaving any firm or location, is just you have ties there, right? You have family ties, friend ties, professional ties, both at your current firm that you might be at and the external kind of, financial planning association, or you have nonprofits that you've gotten involved in. You have to pick up and leave all of that. So I spent 5 years kind of building that network in DC. And so moving to LA, I started brand new. I really didn't know a ton of people, but I knew my firm had a pretty, broad base of resources. And so I decided to leverage that and get involved with some of our business development efforts. We would go to this thing called ACG, which is the Association for Corporate Growth. We would sponsor an award ceremony there. And so you get to kind of rub shoulders with some of the local business leaders there. I got involved in the Financial Planning Association of LA. So I've been involved in NextGen, FPA NextGen for several years now, both in DC and LA. Just kind of, it used to be for financial planners under age 36. I don't know why they picked 36, but now they've changed the definition to be anyone who's less than 10 years tenure in the industry. So it's definitely more inclusive. It's not just based on young people or age. So got involved in FPA there. And then I joined a board of a charity called the Exceptional Children's Foundation, which I just went to an event where they were looking for board members. So it was a really cool event in LA. They just brought all the nonprofits together, and myself as an applicant could have gone and checked out what I was interested in from a board service or volunteerism or any of the causes that I cared about. And so I ended up talking to this one place, and they said, we're looking for young board members. And so I jumped at that opportunity. And so it's just, it's just about getting involved. There's no, magic cure, but I think it's about getting involved and trying to put yourself out there and meeting people both socially and, at the gym or at professional things or at charitable things. You just have to get out there and try to balance that with just life that you're living as well.
Right. So then a lot of our listeners are obviously college students who may be looking to get into the industry, maybe have had an internship or looking for an internship. So what I want to ask, and this is kind of going off of the last question, I want to ask you, how did you network with the firm that you got the job with in LA, being all the way on the East Coast? I think that would be pretty valuable for our listeners that may be looking in locations outside of MSU or wherever their school is, to kind of give them a couple tips on, how could they break into a firm across the country?
Yeah, absolutely. I think a lot of firms are looking for great talent. And so they tend to have job listings everywhere, right? So, you can look at the traditional job postings like Indeed or, any of the other, traditional job listings, but, CFP board has a career center. FPA, I believe, has a career listing. But for me, it was more, I had gone to FPA residency, which is a week-long thing where you can go and get a bunch of CE credits. And it's really more for people in the first couple of years of their career who haven't really had a bunch of client experience yet or hadn't client facing yet. But there was a lot of folks there from Aspirion. They send a small army of people there that year. So there was probably 5 or 6 folks out of a group of 40 that were all from Aspirion. And that just kind of put their name on my radar, early on. And I was like, oh, wow, that seems like a really well-run big firm. I've kind of been a big firm person at that point in my career. And so I was like, well, let's check it out and see what locations they have. I mean, they had locations in LA, in San Francisco, San Diego. There's an office in Silicon Valley. There's one in Cincinnati, Ohio. There's one in Philly and one in New York City. So they have several offices. And for me, it was more, I just need to get my resume to somebody as soon as possible. I've gone back and forth a lot on my resume, both with my previous academic advisor and just with myself, just constantly reiterating it. Doing different formatting and updating my experience and dropping old experience off from high school and college and that sort of thing. So for me, it was just getting the resume out and then starting that correspondence, starting that process. And some firms will have a very well-defined interview process and case studies and personality trait tests and all these things, and some will not. I mean, some of our industry is still very much a mom and pop private firm, maybe with 1 or 2 principals that don't necessarily have it all figured out. And so that's a big opportunity for, I think, folks who are just getting into the industry or just in college to, eventually get in that firm and then be that person that's running, not only client relationships, but also helping their bosses with hiring and, HR and just processes for onboarding people and stuff like that. I mean, that's a huge opportunity.
Right. So that kind of wraps up the little intro part that we try to do. So I want to kind of switch gears a little bit and talk about something that I think is unique to you, or as far as I know, to our guests. But you also teach at UCLA, and I want to talk about why you chose to pursue that teaching role. And then, so this is sort of 3 questions in one. So why did you choose to do it? Was it something that you always saw yourself doing? And then do you think it's made you a better advisor, or how else has it affected your career as an advisor?
Sure. Yeah, great question. So I think the first part is something that will hopefully resonate with you and the guests that are part of a wealth management program already. It's just I owe a large majority of my success to my undergrad program. I mean, Virginia Tech, based on their, classes and just the people I met there in my cohort and my academic advisors and professors, like I owe them a lot. And so my idea of getting involved in UCLA was for a couple of reasons. One of which, it was super close. It was about 5 minutes. Westwood, which is where UCLA's campus is, was about 5 minutes drive from my old office in LA. So there was definitely a convenience factor, but also I wanted to pay it forward in terms of what I had gotten from my academic experience as an undergrad, and not only like the academic part of what I learned, but the real world networking and industry and client facing and client relationship based skills I learned there. I wanted to be that for somebody else. And so UCLA Extension is a little bit different. It's not all undergrad. You can have undergrad students in your classes, but it's more of a graduate level, people who are working in banking or investment world or an RIA and don't have their CFP yet. They're going to go back and take these classes as part of getting their education requirement for the CFP. You know how you have to, either if you go to an undergrad program where you have a board registered program, that satisfies your education requirement for the CFP. If you're a working professional, you have to go back and do that all. So you have to take, I think, 5 or 6 classes and a capstone class, and then you can take the CFP because you've knocked that out. So those are the classes that I teach. But again, I wanted to pay it back. I wanted to pay it forward. I enjoy teaching and sharing my experience, good, bad, and the ugly. I mean, everything in my career hasn't been easy and a cakewalk. I also think that when I first got involved in the program, I was co-teaching an intro to financial planning course with another gentleman who had been teaching it for 20 some years. And so I was in there really as just hey, this is someone who's in the business right now. He's going to give it to you straight, good, the bad, and the ugly, and what he loves about the industry and what he would recommend to someone who's just dipping into it, or, because some of these people were working at a local bank branch and they were kind of quasi doing financial planning, but more from a product-based solutions, right? Here's a CD or a money market or a annuity product or, whatever investment that you're in. And they wanted to branch out into what we do. And so that's what they had to do, is go back and take these classes. So that was kind of fun for me to share my perspective and give advice, because there's so many different routes in this industry you can take. And I won't get into them all now, but I was trying to share that wisdom, even in the short, I've only been out of school for 8 years at this point. So it's not like I have decades of experience, but in my short 8-year career so far, I have a lot of different vantage points with different clients and different firms. So that was the reason I got involved. And now I teach income taxation as it relates to the financial planning process, and an ethics course, which is really just a 4-week primer on ethics, because, everyone thinks that ethics is just straightforward. Just be a good person. Don't steal money from your clients. Right. But it can be nuanced, particularly as it relates to the exam, right? So if you're going to take the CFP exam, ethics is a big part of it. And so you have to just be prepared as to how they're going to ask questions, and all the different compliance rules that we face as professionals, and, being fee only versus fee based versus fiduciary and suitability. So there are some nuances there.
Yeah. So now, did you kind of get into the income tax class because of your previous experience with SBSB?
I think it helped. I think it helped them actually pass the smell test as to whether or not I was qualified to teach an income tax class, because I'm not a CPA or an EA. But they really needed some help. They had a professor there who retired, and he had the income tax class. So they needed somebody to slot in there, and they just made sure that I was, qualified and could, go through a text with them and go through slides and make sure I had enough real world experience to be dangerous in that subject matter. So, and then to your other question as to, do I think it's maybe a better advisor? I think it has, because there's an element to being in front of a class, right? There's just a presentational aspect of presenting in front of people that you do in front of clients all the time. So that helps you sharpen those skills, and just being in front of us, in front of people. But I think also from just the nitty gritty of the tax code and tax law changes. And, we had the Tax Cuts and Jobs Act which went into effect at the end of 2017, and all the different retirement contribution limits and AMT and ISOs for, like, it has a lot of real world applications for what we do with clients. And a lot of advisors will just kind of end up referring the client to a CPA, which is what I do in my current role now, because we don't have a tax practice. But you still have to be really knowledgeable about those strategies so that you can make a really solid recommendation. The CPA might just be the one who's crunching the numbers in April, right, to file the return, because a lot of CPAs are very reactionary and will just kind of intake the data, put it in, tell you what you owe, tell you what your estimated tax payments are going to be next year, and that's it. Whereas planners should be the ones who are being a little bit more proactive around, Roth conversions and capital gain harvesting and capital loss harvesting and all the different charitable, giving strategies with donor advised funds and how that ties into the income tax projection that you may be running for the client. So yeah, I think it's helped a lot, just keeping me sharp on that.
Yeah, for sure. So I want to kind of jump into like the third phase of the podcast here and kind of fast forward or maybe jump back to what you were talking about earlier about your current role. So you are now the Director of Wealth Planning at Catalyst Wealth Advisors. And I want to talk about how you kind of came into this opportunity and what most excites you about it. Because I know it's kind of a starting out firm. You guys are pretty small right now, but
Sure.
I'm looking to grow. So.
Yeah, absolutely. So we got introduced. So my boss, Ryan McKee, and I got introduced. So he is a member of XY Planning Network. And I think if anyone takes anything away from this podcast, XY Planning Network is a real powerhouse in particularly the fee only space of our industry right now. And for those listening who don't know what it is, basically it's a network of 12 or 1,300 firms across the country that fall into the category of fee only, and they might just be starting out. So XY Planning Network is an actual for-profit company that services these firms. And basically they'll help you launch your RIA, they'll do compliance, they'll help you with sales and marketing. They have processes, they have technology discounts, right? So there's a lot of technology in our business. And, like Orion is a big one for portfolio reporting and software. And they have a discount for, if you're an XY Planning Network member, you can also get a discount when you get Orion, because a lot of these softwares are pretty expensive. Right. So basically it's just a huge network of fee only RIAs in the country. And so Ryan, my boss, has been a member of them for 2 years. And so we got introduced through a mutual connection there, and we just started chatting. I was still in my role at Facet Wealth, supporting about 100 relationships, and just starting to realize that as much as I enjoyed helping people who don't traditionally have access to a CFP because of the cost or the asset requirements, it really wasn't where I wanted to be long-term, right? I was on 8 to 9 Zoom client meetings per day, right? In the height of the pandemic. I didn't necessarily agree with the way the company was going and that sort of thing, but it was still a great experience. I just knew I would be open to something else if it came across my, LinkedIn or desk or whatever you want to call it. So Ryan and I started chatting and just making sure that we were aligned on our values. We were aligned on, what we thought financial planning was, or what client service was, or the right way to work with clients. Because there's a lot of different opinions around our business, right, wrong, or indifferent. You have to, if you're going to work with somebody that closely, I mean, it was just him and I until about a couple of weeks ago. And we're working in different parts of the country remotely until, COVID settles down, where I'll probably go out and visit him 4 to 6 times a year. But we wanted to make sure that this was the right fit from a number of perspectives. And so we just started chatting over a course of probably 4 or 5, phone calls and Zoom meetings, just talking about what it would look like, not even talking numbers or salary or anything like that, just getting to know a little bit about how he felt about the firm and where it was in the kind of birth process, and the clients that we were working with and what role I would be able to serve. And so his expertise really lies in investment management. And so, his background comes from commercial real estate. He then was in the investment management world and more in the broker dealer world for a little bit. And then he decided that if he wanted to really do fee only, bespoke advice to clients that he really cared about, he wanted to launch his own firm. So that's why he launched his own RIA back in 2018. And so he was just, kind of going along by himself, really taking on all hats of the firm, single member RIA, single member LLC. He's got all the compliance and administration. He's doing all the Schwab paperwork himself. He's doing all the investment research, all the financial planning. And so he just needed someone to really come on board and start sharing those responsibilities. So decided to make the leap. It's gone really well so far. It's really interesting just to see the life cycle of the firm evolve. We have 60 million in assets right now, but we really do lead with planning. So we use eMoney for financial planning. All of our clients do get really high touch client service, financial planning, professional referrals, right? If the client needs a CPA, an insurance agent, an estate planning attorney, we're going to make those really warm referrals to at least 2 or 3 people so that the client can make their own decision. Right. and then just being, serving clients the only way I know how, which is bend over backwards, high touch. They like to throw around the term white glove service in our industry, which is really just anything the client needs, we're there for, obviously within the scope of the engagement. But we have three ways to work with clients, one of which is a very traditional assets under management fee. So basically throw in the whole house of services for starting at 1% of assets under management and then tiering down from there to 0.75 and 0.5, depending on the size of the portfolio. We have a second service, which is really the flat annual subscription model. So if the client decides that either they're not going to bring assets over with us or they just feel more comfortable with a certain arrangement, we do have a flat subscription fee model. So anywhere from $4,000 a year to $12,000 a year, depending on complexity. It's paid quarterly. It can be deducted from managed accounts or just paid via check. And then we also have a first-time comprehensive financial plan upfront, where we do the entire process from soup to nuts. We deliver the financial plan and recommendations, and then we include kind of a 6-month window after that engagement so that we can follow up and help with any implementation of those recommendations.
Right. So you mentioned that at least Ryan has done a lot of things on the back end by himself. Has there been anything that you thought you wouldn't do that you have done, or anything that surprised you, like, whoa, I didn't think I would be doing this?
It's a good question. I've had the mentality my whole career where I don't care what I'm making or where I'm at. I'm going to get coffee down the street if you need me to. And it sounds cliche, but that's the way I was raised. And that's the way my professors told me, going into firms like this, I think we're in a different place now as an industry where everyone has a fighting chance. There's not necessarily this like, hey son, or hey, hey ma'am, you're going to sit in that chair until I tell you you're ready to meet with clients. I think it's come a long way in terms of associate advisors, junior advisors, whatever you want to call them, are in the game from day one. Whereas before it was probably a little bit more, okay, you might be in the meeting taking notes at max, or you might be research only, or you might be investment research only. So I only say that to say, I think my whole career, I've been just anything you all need me to do, whether I'm in a lead advisor capacity or not, whether it's preparing a Schwab form or doing a really nitty gritty cost basis research project, which, there are some parts of what we do as a business every day, which aren't flattering, right? They're not glamorous. They're very much analytical. They can be number crunching. There could be software crunching where you're in money just pouring over a plan for hours. But it makes it all worth it at the very end when the client, gets a recommendation or gets a plan and is just ultimately satisfied with what you've done for them. And there's a trust factor. So in the current firm, since it is just Ryan and I, now we've brought on our third team member, Kristen, we're all kind of sharing all the hats, right? We're wearing all the hats. Right. I've prepped Schwab paperwork since joining. I've done cost basis research since joining. We're a little bit of a quasi ETF approach, but we also have some individual stock strategies. So, day-to-day stock market monitoring and digging into individual companies. That's all. I signed up for it when I talked to Ryan at first. It was like, whatever you need me to do to help this firm grow, because I think there's a lot of potential here. I'm going to do it, and I'm going to do it with a smile and take off your plate if I can.
Right. Absolutely. I think that's a good mentality to have. And I think our listeners can definitely learn from that, and especially them being on mostly the younger end, and just getting in and doing as much as you can to stand out. So
I'll give you a funny example of that. So sure. When I was a sophomore in college, I came home to my hometown of Allentown, Pennsylvania, and had a very small internship with a local firm. It was a couple hours a week, and I was getting paid nothing, but it was still great to be in that kind of office environment, just, see people and see what they were doing and sit in on meetings. But as an example of that mentality, at one point I was researching picnic tables for the back office, so where they eat lunch, so that they could eat at lunch in the summer. So at one point, the principal of the firm, big deal, guy's been around for 30 years, and I were kind of in our suit and tie building a picnic table in the back of this office, so that the whole company could sit there and eat. And so we're sweating in 90-degree heat, but it was one of those things where it wasn't related at all to financial planning, client service, investments, anything, but it was something that at the end of the day, he was thrilled to have, just another set of hands that was not complaining, not saying, oh, I'm college educated, right? I'm in the middle of an undergrad program for CFP. I should be in there taking notes on meetings and meeting clients and, shadowing lead advisors who are frying up new business. It was just, hey, whatever you need, I'm there.
Absolutely. No, we actually just learned how to put together picnic tables in our intro class the other day.
Nice. There you go. That should be required reading.
Right, exactly. So this has been a great interview so far. I want to kind of just wrap up with one last question, and we already kind of touched on it, but maybe one other piece of advice that you give to younger advisors that are looking to break into the industry. I know we touched on a couple different things,
Yeah.
being willing to do everything, networking, stuff like that, but maybe just as a wrap up.
Yeah, there's a lot. And I think this is one of the things I'm most passionate about, because I think there are a lot of different ways to go. And I don't ever want to get on my high horse and say there's a wrong direction to go in the industry, or the wrong firm to work for, or wrong type of firm to work for. The only thing I would recommend is just to be picky, right? When you're looking for an internship or a job, and I realize it's easier said than done in certain job markets, and with, COVID and, people tightening their belt in certain recessions in the years past, to get an internship or to get a job. But to really be picky about where you want to be, what you see yourself doing. Are you really interested in the investments, but not so much retirement planning, right? If you know that now, or you think you know that now, then research it, right? Go into those job interviews, go into those firms, or make sure that you're applying for a job that is heavily involved in investment research, rather than some of the nitty gritty client service, financial planning, estate planning, retirement planning, insurance planning, tax consulting. Just really be picky. And if you're at a place, even 4 or 5 years into your career after college, if you're in a place where you don't see the career path, you don't necessarily agree with the way that management's taking the company, you really love your clients, but at the same time, you need to look out for yourself. Just be picky and leave.
Right.
I think there's a lot of people who still look down on people for jumping around jobs. And I know I'm biased because I've jumped around a little bit, but if you are not happy somewhere in our industry, you can be there for a long time. So just really be picky, but be thoughtful around how you want to work with clients. If you want to work with clients, some people know going in that they don't necessarily want to be client facing, right? There's a ton of opportunity in our industry, in our business, for non-client facing people, because wealth management is exploding, and every firm needs operations people. Every firm needs investment only people. Every firm needs business development people. If you're interested in sales and you really want to do a lot of selling and networking and business development, you may not want to sign up for a role where they expect you to be a grinder, right? A grinder doing planning analysis, a grinder doing tax projections, a grinder doing 4, 5, 6, 7 client meetings a week, where you're kind of in the seat, either virtually or in the room. Just make sure you know what you're signing up for, and be really thoughtful around questions you ask to employers, because it's their job to make their case for why you should want to work there. I mean, it's a very tight labor market right now for our industry. And I think CFP candidates and wealth management people who are educated in the subject matter are in very high demand.
Right.
And so you can be a little bit picky in terms of compensation and role and expectations. And is there a path to being a partner at this firm? Or are we owned by a gigantic wirehouse that, it's just kind of, I'm just going to be one of 1,000 employees, right? I'm not saying that's bad. It's just, you have to go into it with eyes wide open, or else the expectations aren't going to be met and you're going to be immediately unhappy. So I would just say, yeah, that's kind of a few pieces of advice there.
Yeah, absolutely. I would agree with that as well.
Yeah.
So Mark, great interview. I had a great time asking you these questions, and we really appreciate you coming in and sitting with the college student and trying to spread the word about our industry and some opportunities there. So I appreciate
Absolutely.
it.
Yeah. Thank you for having me. And if anybody has any questions at all, I always make myself fully available. If you want to find me on LinkedIn, it's just Mark Cecchini, Cecchini. Feel free to add me, reach out with questions. I enjoy this stuff. It's really a passion of mine. So if anybody has questions, don't feel hesitant to reach out.
Absolutely. Appreciate it.
All right. Thank you.
Hello, everyone. This is Vincent Pacillo, producer of the MSU WMA podcast, where we are inspiring and educating the next generation of financial planners. Thank you for listening to today's episode. If you enjoyed it, please check out our channel on all platforms such as Spotify and Apple Podcasts, and check out our social media at MSU WMA and MSUWMA.com.